Hey guys, good afternoon, everybody. Today is Monday, April 7th. It is 2:25 right now. We have a scheduled mentoring session with Jarrell today. So this is a private one-on-one session, but if you guys want to sit in and listen in on our session, you guys are more than welcome. So I'm going to go ahead and finish setting this up, and then I will send the link over to Jarrell to join. Good. Let me get this link sent over to Jarrell. There we go.
Wait, hold on. Did I connect?
Hey Jarrell, can you hear me?
Yeah, I can hear you. How are you?
Doing good, bro. How are you?
I'm good. I'm good.
Perfect. Thanks for letting us push this back. Whenever I
Uh,
have a first meeting with someone, I never know how long it's gonna go for. I like hope it goes for like an hour and a half or like
uh,
less. This
how
one,
was it though? Was it rocky? Was it smooth?
it was cool. I mean, it was cool. It was just like going over a lot of basic stuff, like the platform and stuff. Basically, like our first meeting,
Okay, okay.
platform and some intros to the strategy and stuff like that. But
Uh-huh.
it just took a little bit longer to set up everything because they didn't have
Mhm.
any. They didn't sign up to the indicators and all that stuff. So it's just like more.
Yeah. Oh, so like basically what I did.
Sort of, but like this one was like more because like
Yeah.
signed up and you had like access to stuff, but
Uh-huh.
like it was like super fresh, brand new. But it's
Uh-huh.
cool. They got
Yeah,
everything.
there's no rush. Like honestly, like I understand. So like I wasn't really like worried about it.
Yeah, yeah, no, definitely. Yeah, everyone learns at different paces, so it's just
Mhm.
like everyone's kind
But
of different.
I've been paying attention. The market's crazy right
Oh,
now.
bro, man. I mean, it's crazy because you're just starting, and it's like
Yeah,
you don't know what's normal, right? Like you don't know what's regular and what's normal. So like
yeah,
I think today's like it's gonna be talked about for a while because
yeah.
I like the movement from today was like crazier than what I've seen like during COVID, which is crazy because you think COVID markets like in a super crash, but
Mhm.
today it was like crash and back up and crash and back up. So it was
Mhm.
like the movement was just all over the place.
Yeah, I was watching this morning and then you kept mentioning the ATR. So, okay, that's what I was trying to understand. Like, what's like normal for ATR?
So normal ATR when the market's not like when the market's normal, it's like how it is right now. It's like between like 25 and 30.
Hmm.
Usually like 25, 35, maybe 40. Like
Hmm.
never above 50. But the ATR today was like 200. So that was like,
That's
like
insane.
it's like four times or five times the movement that we normally have.
Hmm.
So
Yeah, I did wanted to start this week, but I seen how crazy the market was. I was like, I don't know. So I kind of got like kind of iffy about like just going in. So I was
yeah.
like, I'm gonna start this upcoming week because
Oh
I
yeah.
wasn't sure.
Yeah, yeah. Honestly, it's probably better that you're just kind of watching and playing, playing by ear. But if you do want to like kind of play around with it, you can just always go on the paper account. So
Oh
you,
yeah, yeah, that's what you mentioned. You do paper trading.
yeah, if you ever want to just play in the market, right? You want to play in the market, but don't like risk your actual account, then
Hmm.
the paper account, you can still kind of play around and then make mistakes and then kind of learn from it. Because when you're on the paper account, it's the same thing. Like you'll be doing the same exact execution, same exact buttons and all that stuff. It's just
Not your money.
it's not your money, yeah. So like if you screw up, you can always just reset it. It's not like
Okay,
buy
perfect.
another account or anything like that.
Yeah, I'm not gonna lie. This week I was watching, and then I was also like watching like online and stuff. I was like, yo, and because I don't know what is normal. Like you're right, I don't know what's normal or what's not. So I just kind of just been watching everyone.
Oh yeah, no, for sure. And I wouldn't blame you, bro, because like you're like super fresh to this. So it's like, I mean, even if you knew what was normal, I don't think you would understand that like the gravity of how crazy the market was today. Because there was people who were trading and they were killing it. Um,
Mhm.
and it was like, I feel like they didn't even know what they're doing either. They were kind of just getting in where they thought the entries were, or like using the
Mhm.
prop, like, because the thing is the ATR was so high. And I was like, we normally use like a 30-30. So
Mhm.
like, you think about it, a 30-30 is like super small like that. And then you
Mhm.
compare it to something like, I think we were using like 100. And
Yeah,
then
I
people,
seen that too.
yeah, and then some people are using like 200. So like, you see how big of a difference it is compared to
Yeah.
like, so it's like, yeah, you're probably better off just sitting out. Like one of the new guys that also started with us recently, he told me like he didn't take anything because he understood what I was talking about with the market kind of going crazy and like being so unpredictable
Mhm.
that it was better for him to for his psychology, right? Because the thing is, if the bad thing about trading in a market like this is if you make money in a market like this, you don't understand that you're getting lucky, right? Like people think,
Mhm.
oh, like I know what I'm doing. And then when the market goes back to normal and they continue to take these risky trades, and they're like, crap, why is this not working? And it's like because the volatility was so crazy that you're kind of getting lucky, right? You just enter a
Yeah.
position and then it spikes to your profit. But in a normal market, that probably wouldn't happen.
Mhm. Now, I also heard it's good to also like be disciplined also and like knowing
Oh yeah.
when.
Yeah, no, definitely. For myself, I haven't really been disciplined kind of lately. I feel like today, the loss that I took, that was kind of like a FOMO trade. I don't know if you saw the trade that I took today,
Mhm.
but it came up and it didn't look really good. Usually I'd be like, okay, whatever, I'm just gonna let it go. But for
Mhm.
whatever reason, I was like, oh, this looks like it would have played out nice. So I just got in late and then it ended up just spiking. There was like another or not a news event, but something happened in the morning. I'm not sure if you followed it. It was a sell entry, and then the EU was like, oh, we're gonna work with Trump. So as soon as they did that, or once they said
Mhm.
that, the market started shooting up like right here. This is like crazy because if you look at how much this moved, let me measure real quick. So if you look at how much this moved within like, we'll say like 1, 2, 3, 4, 5, 6, 7, 8. So this movement right here in like
Mhm.
8 minutes moved almost 2,000 points. This is how
Mhm.
much the market usually moves in a month or more than a month.
Oh, no way.
So this happened in 8 minutes. So
Uh-huh.
like I was trying to get in right here because I was like, oh, this is an MPSV two. It was like it wasn't a super clean entry, but it actually wasn't even an entry at all. It was like a FOMO entry. Because the thing
Mhm.
is, this red candle was supposed to close below this black line, and it
Mhm.
didn't. But I was like, oh, it's probably gonna close, and then it ended up not closing at the last second. And then
Mhm.
immediately this thing shot up like 2,000 points. So like
Uh-huh.
it stopped me out, but I'm glad that it stopped me out where it was supposed to.
Yeah.
It was moving so fast that there was someone else in the chat. They were like, "Oh, there's people on Reddit like complaining because like they ended up taking the opposite direction, not on our group, but like the traders in general.
Yeah.
And then the thing shot up so fast that they blew all their accounts.
No way.
Yeah, so
Also, I think earlier you had mentioned like there was a red candle that it had like 500. I think like it was something like that. You said it was like 500.
the
That's like it's
yeah,
I don't know how to explain it. Like it was one of the red candles or something. It was like it
right
wasn't
here.
normal that you mentioned.
Yeah, I think it was like one of these red candles. So there was like an entry that came up, I think. It was like, oh, it was this one right here, I think. It was like it came down, retraced, and then this was the entry.
Mhm.
Yeah, I think it was this candle. Or it might have been somewhere like this, but even this is not a normal candle. Like a candle moved 257 points.
Mhm.
Or I think they were talking about this one up here. I know what you're talking about though. Like someone mentioned it. Yeah, it was like this one right here.
Oh yeah, I think it was that one.
So it's crazy. Yeah, it is crazy because 500 points. This is usually the type of movement that would happen for an entire day, or like half of this. Like an
And all
entire,
this and all this happened in 8 minutes.
or this happened in 1 minute.
Oh, 1 minute? No
Yeah, because
way.
each candle here is a 1 minute candle. So like normally, if you like, so let's see if you go back to like a regular day.
Mhm.
I'm gonna go back to just a random a day before the tariffs happen, right? So I'm gonna go over here to like see how far I can go back. Okay, so let's go to like this random day in March. I'll zoom in a little bit. Now let's go to a day that's just like pretty normal, and it's like okay, so like this right here. This is like sort of a normal day. It's not a super normal day, but it's for the most part normal. Let's like measure it from this top point.
Mhm.
Just get down to okay, so to the end of the session. So see, like this is a whole day. This is from like 6 o'clock until like right now, like 2 p.m. See how
Hmm.
much this it took like a whole day for it to move 500 points, right?
Hmm.
But you compare it to today, it was moving like over 500 points in like a minute, like less than a minute.
Oh, it's crazy.
So the type of movement that was happening today, like you'd have what you normally would take, like 8 hours, it would take
Hmm.
a minute for it to move that much.
Is this like does this happen frequently or like how long does this last?
Well, the thing is, the tariff news is like, the tariffs are going to go away tomorrow. So
Yeah.
as long as the tariff news is going on and there's like a lot of stuff going on, like, there's some sort of news that's affecting the market,
Hmm.
and it's gonna last for a while. It's gonna maybe last, I'd say a couple months, maybe the rest of the year.
Hmm.
So the good thing with this is that the strategy is still working. So the main difference is that you just have to adjust your TP stop loss based on whatever the ATR is. But we have to figure out what the average ATR is. Because initially the average ATR was like 30 points. That's why our TP stop loss was 30-30 for like pretty much every entry.
Hmm.
But see if I put a 30-30 here, this doesn't even cover anything.
Yeah.
Like it's just so crazy the way it's moving. Like if it was to move against you, like even just in the slightest bit, um,
Hmm.
you could lose a trade just because it decided to move against you for like maybe a split second.
Hmm.
So the thing is the strategy still works, and that's the good thing. The thing that doesn't that we need to make adjustments is the TP stop loss. So
Hmm.
I think right now the baseline is probably going to be around like 50 points to 100 points. We just have to figure out what's normal, or what we have to understand is like when to sit out the market. Right, like today should have been a day to sit out the market, like to just don't take anything, because this is so unpredictable and it's like something that we haven't experienced, where we don't know how to really adjust to it aside from making your stop loss and your TP a little bit wider. Because there's people who took trades today, they just took them with really big TP stop losses, which is okay. That's kind of like how you would adapt to it.
Yeah. So everyone was like mainly doing like 100.
Yeah, either 100, and then when it got really crazy over here, some people are doing like 200, just
Oh
to,
no.
because the thing is, these candles are big. Like basically what you're trying to do is you're trying to set your stop loss like wide enough so like if the next candle goes opposite, it's not going to stop you out, right? You'll be
Hmm.
able to survive the back and forth basically.
Hmm.
But the problem with that, so here's the problem with that is I'm on a 300K count, so I can go down to like one contract size and I'll be okay. The
Hmm.
people who are on like the smaller accounts, like a 50K account, like it's not possible, right? You have to go to another asset because right now we trade the mini.
Yeah.
You'd have to go down to the micro. So basically the mini is times 10 of the micro.
Hmm.
So like instead of using like one contract here, you go to the micro and you go like even less. So like for example, for here, it's like it is $5 a point move, right?
Hmm.
And on the micro, it's 50 cents. So see how it's like a big difference?
Oh, so you got to minimize a lot more.
Yeah, exactly. It's the same asset. So like for example, right here, this is YM, right?
Hmm.
And see how the candles look right here?
Yeah.
The micro is MYM. It's just you put the micro in front of it, and it's
Uh-huh.
literally the same chart. It's just cheaper to trade.
Hmm. Oh, okay, okay. Yeah, I
Yeah,
understand.
yeah. Because we trade a mini, because normally like you don't get that much volatility. You don't get like 1,000 point moves, 2,000 point moves per day. Um, but we'll see. Like you said, we don't know what the average is right now. So I think by the end of this week, we should probably have a good idea of what the average is. I think today was
Hmm.
just a crazy day in general.
Hmm.
Let me check the calendar if there's any news this week.
Do you recommend I just watch for the rest of the week or just try and paper trade this week?
I would probably just try and paper trade because you have to you got to train yourself to like actually like take risk, right? Because if you
Yeah.
just sit on the sidelines and even if it's paper account or not a paper account, you're not really going to learn that way. It's better to
Hmm.
like trade on the paper account and then you'll be like, oh fuck, like I should have did that differently, or that was a bad trade,
Hmm.
or I didn't set my TP stop loss proper, right? Because you want to
Yeah.
understand how to like use the functions and how to actually like execute the trades even though
Hmm.
they're not real trades. Because I
Yeah.
think understanding the functions and the platform just in general is still pretty difficult, even though you're not trading, a real account.
Hmm.
So that you can make those mistakes, and then when you trade your real account, then you're like, you know exactly what to do. Because it's gonna be
Yeah.
the same thing, just it just will be on a real account.
100%. Yeah, I understand because I know you're gonna learn from your losses and everything, and it'll make you like
Yeah.
move different.
Yeah, exactly. You gotta like make mistakes and then kind of be like, oh crap, like I really screwed up on that move. Luckily, it was like on paper, and then now you can do it again on paper, and then so
Mhm,
you can see how you do things properly and see how you do things improperly.
mhm. Yeah, I think this week I'm gonna pivot trade, and then hopefully by the next week after that, I'll probably hop on the account.
Yeah, yeah, exactly. I don't think this is an everyday thing. I think today was just really big because we're coming back from the weekend. So like, a lot of uncertainty. People come back in the market and they're like, oh crap, is the market going to keep dropping? Or is it going to go back up?
Mhm.
And then on top of that, we had the tariff news, of course, like the responses to the tariff changes. So yeah, because I think the tariffs go into effect on Wednesday.
Oh, Wednesday? Okay.
Yeah, Wednesday. So market will probably be, I won't say it's flat. Well, I won't say it's going to be normal tomorrow, but I
Mhm,
think it's going to be a little less crazy. So I think tomorrow's going to be a little less crazy, and then Wednesday it's probably going to move a little crazy again.
mhm.
So this week is considered inflation week and
Yeah.
Fed week. It's inflation week because we have the inflation news coming out on Thursday. So tomorrow there's no news. It's just
Mhm,
Fed speaking. This is why we call it Fed week because every day there's a Fed speaker. So today we had Fed Kugler speak. He's like one of the FOMC Fed members. And then
mhm.
tomorrow we have Fed Daily. You don't have to know this stuff. It's just you just have to understand that okay, the Fed's speaking this week, so they're going to be talking about interest rates, the economic projections and just stuff like that. Like you don't have to
Yeah.
know stuff, but you just want to be cognizant that okay, market might be moving kind of funky this week because the Fed's speaking.
Mhm. Okay,
Um,
okay. So what do you look for like when like in the news, like how do you know how it's gonna operate the following week? Just depending on what they say.
well, because the same Fed stuff, well, the same new stuff happens every month.
Mhm.
So last week was NFP week. You know how the market was kind of crazy last week too. Like the market,
Yeah.
usually the first week of every month is NFP week, which is non-farm payroll. That's where the employment data comes out, and the jobs data. So when you get that data, that's usually like it's a good indicator of like how the economy is going, right? Because it says how many people quit, how many people are hiring, how many people are getting paid, et cetera, right? Because if there's more people that are hiring and getting paid and on payroll, then it's like okay, the economy is good because we're not in a recession. But
Mhm.
if like places are laying people off and people are quitting and there's no jobs available, like in the job market
Mhm.
then you can kind of predict that okay, the market's not doing well because if people aren't hiring, it's because like these companies don't have money to hire people. So you can kind of just assume that um, the following next kind of weeks are going to be kind of more bearish than bull.
Mhm.
So the first week of each month is NFP week. The second week is usually Fed week. This is the second week of April. So we have the Fed speakers talking on Monday, Tuesday, and then we have the Fed minutes right here, FOMC minutes on Wednesday. It happens every Wednesday, the
Mhm.
second week. And then we have more Fed speakers talking. And then on Thursday, we have CPI. I don't know if you're familiar with CPI, but CPI is Consumer Price Index. This is
Mhm.
inflation news. So basically, it's going to indicate, is inflation high, is inflation low? So but this is like where the data starts to come together. Because like first
Yeah.
week, you got the jobs data, employment data, layoffs, quits, etc. And then the second week, you have the Fed news, which is going to be emphasizing the jobs data and then tying that in with the inflation news. Does that make sense?
Yeah,
So
I
like,
understand.
every week there's like some sort of economic news that's coming out, and they all come together full picture because it's like, all right, this is what's happening for this month. Next month, you can kind of predict is the market going to suck or is the market going to be good, right? It's going to be
Mhm.
bullish or it's going to be bearish because you're putting all this data together, and then you're kind of you're trying to see some sort of chart. Like say for example, so let's say January jobs data bad, right? And then you can say inflation, bad. And then you can say um, economic projections, bad. So like say for example, that's like January, right?
Yeah.
And then we'll say February, jobs data, bad, or yes.
So you're basically just making your own chart in your head of like how the market's moving.
Yeah, but this stuff doesn't really matter to you because we're
Yeah.
not trading on the higher on like we're not really trading from month to month. We're
Mhm.
kind of this is just giving you an idea so you can have some sort of bias. So
Mhm.
like for example, January is bad, February is bad, and then if this is in a downward trend, and then March, if you're assuming what's going to happen for March, we don't know, right? But if
Yeah.
you assume, you would just say something like, you just say, okay, if January and February are bad, then March is probably going to be bad, right? You can kind of predict that that's what's
Mhm.
going to happen next. Or if the opposite happens and it's like jobs data is good, inflation
Oh, then it's slowly gonna
better.
pick back up. Yeah.
Yeah, exactly. So see here, the economy is kind of going down,
Yeah.
and then you're like, okay, March actually the data is good, so maybe April is going to be either good,
Better.
yeah, better, and we're coming back up, right?
Hmm.
So you don't need to know this stuff, but this is just kind of like what the data is, because every week it's going to be the same thing. Like on first week of every month is jobs data, second week is inflation data, Fed data. So CPI is consumer price index, PPI is producer price index. These are
Hmm.
like the biggest news events that you'll follow. So like first Friday of each month is NFP, that's like the biggest day. And then CPI, PPI that happens Thursday and Friday. Those are like the big inflation days. And then for the next week, you'll see here it's kind of slower. Like we have some like basically retail data and stuff like that, but this stuff doesn't really affect the market so much. And then you can see over here it's like the jobless claims, like how many people are requesting what's that thing called? Unemployment, like stuff like
Uh-huh.
that. So like then we have the housing market data come out and stuff like that. So like the third week is usually like unemployment data and housing. And then for the following week, this is like the fourth week of April. Then it has
Also, I'll tell you for the whole month, like what's gonna be talked about.
exactly, and these news events happen every it's called every month. So it's like you'd kind of expect what's gonna happen next. Like for
Mhm.
example, this is the fourth week of April, and it's usually kind of slow because there's not anything here that's kind of crazy that's coming out. The
Yeah.
main stuff happens the first 2 weeks.
So the
So
first 2 weeks, okay.
yeah, so like the first 2 weeks, like the jobs data comes out, and then inflation data, and then the economic projections from the Fed, and then from there it kind of just carries over. So it starts to like be kind of crazy the first 2 weeks, and then it slows down week three, week four, and then it resets again for the next month.
Okay. So every first 2 weeks of every month.
Yeah, the first 2 weeks of every month, you're gonna have like the biggest economic data. Not that it matters because, like I said, we don't trade news. Usually, if
Yeah.
there's news, we just kind of sit out the market anyways. But it's always good to know because you kind of want to have a bias, right? Like if you're taking sells and you know the economic data sucks, then you're like, okay, I'll probably feel more comfortable taking sells versus taking buys.
Mhm.
Yeah. So that's kind of how I look at it. Um, Again, you don't need to know this stuff, but it's just good to understand what's coming out and what's important. If you want
Mhm.
to put this in your notes, like the really important stuff is going to be
Oh yeah, let me
NFP.
give me
Yeah.
1 second. Let me put this one. What is it?
The first, like most important, is going to be NFP, which is
NFP.
non-farm payroll.
Mhm.
It happens the first Friday every month.
Friday.
And then, and these are the news events that spike price. So like the other news events are going to push price a little bit, but this stuff spikes prices. Like you're going to see big price spikes based
Mhm.
off of these events. The second one's going to be CPI, which is Consumer Price Index. That's going to be usually the second Thursday of each month.
Second Thursday.
And then the last one is going to be PPI, which is Producer Price Index. That's
Wait,
going
what
to
was the last one? Sorry.
PPI. It stands for
PPI.
Producer Price Index. And that's going to be the second Friday of every month. Usually, it's not always going to land on that day, but usually that's the day that it lands on.
Every.
And then one other thing that you might want to look out for too, this isn't going to happen during live session time, but it usually happens midday. It's FOMC minutes. So this happens on the second Wednesday of every month. For that event, it's the Fed, which is basically the U.S. Treasury. They will discuss economic projections for like the following month. So basically, they'll have like some sort of input, like, hey, the market's kind of like going in a downwards trend, so like we're going to be going into recession possibly, or the market's doing good and we're not going to go into recession. So that's kind of like the main four things that happen each month that will affect the market.
Okay.
And if you ever go back and see, like, if you ever pull up the data, like if you're, so for example, let's see, we'll go to last month. So let's go to the first Friday of March. I'll go to this clean chart here, so there's nothing on there. So let's go to the first Friday. So I can kind of just show you how like the price, like how price moves on those specific days. If we had a contract roll over on this day. March. It was March 7th. Okay, so see how the candles here are moving super like small,
Mhm.
like around this area?
Yeah.
And then see how there's just a huge candle that came out of nowhere?
Mhm. Oh
That's
yeah, that one looks crazy. Yeah.
yeah, that's the NFP candle. So like I said, NFP is like the high, it's like where the most manipulation happens.
Mhm.
So this is like the first one that I showed you that to look out for. This happens pre-market, so it doesn't really, it's not going to affect you unless you're trading pre-market, but this is a market reaction to the NFP,
Mhm.
non-farm payroll data.
So prior to that happening, like, did you like you think people seen it coming? Like they know it was gonna happen that day?
Yeah, because it happens the same Friday every month. So like people gamble for these types of moves. Like they're just
Oh, okay,
yeah.
okay.
That's why like I was saying, like if it's good to know, but you don't like it doesn't really affect you because you're not trading during that time.
Mhm.
Like there's a trick that I used to do before with the prop firm accounts, like with Apex. Like you can kind of cheat, not I wouldn't say cheat, but there's a like a strategy that I used to tell people is like you just wanted to pass the account because you know when they have the promo going on, it's so cheap.
Mhm.
So like what you can do is you can buy accounts and then you can buy one and then the first one you'll buy and the second account you'll sell. So one of the accounts is gonna win, right?
Yeah.
So like that's a strategy that you could have used if you wanted to just get funded right away.
Okay, so okay.
So yeah, that's just an example of like, you know, how the news affects the market if you're following one of those four news events that I mentioned.
So wait, how many points is that candle?
This candle was
No way.
381. Yeah, because if you wanted to pass a 300K count, you need 117 points
Mhm. So you could have passed it in just this candle?
with one trade. Yeah. So like as soon as the candle opened, you would just enter a buy and it would shoot up and hit your TP. And then
No
you could pass,
way.
you'd make like 20,000 on that.
That's crazy because somebody probably did make a lot of money
Oh
from
yeah,
this one.
sure. Yeah, no, there's people out there who trade that way. They just trade news. I used to trade news a long time ago, but then I realized that it was just a gamble. Like, you know,
Yeah.
it's like it's not consistent. Like it's not efficient. Like you'll get lucky every so often, but then once you're not right, like for example, this candle here spiked both ways. So like if your stop loss was too tight, you could have gotten stopped out before it reached your
Oh yeah. Because it's like a 50-50.
yeah, because some before like so like last year, you would just have it spike in one direction. It didn't have like this type of movement where it came down and then it came right back up.
Mhm.
So like the market's always changing. But yeah, that's like one way to do it. I don't recommend people do it anymore because these candles are usually not one-sided. They're kind of all over the place.
Mhm. No
Yeah.
way. So someone lost 20,000, someone gained 20,000.
Exactly. Or they both could have lost 20,000 if it like went, you know, 100 points this way and then 100 points this way, which it did.
Oh yeah, yeah, yeah.
So like they both could have lost if
Depending on their TP.
Exactly, yeah. Depending on their TP and depending on their stop loss. Because yeah, if you have a super wide TP, like if you're going for 200 points, then okay, you could probably survive it. But if you're going for anything
That's
less than that,
crazy.
yeah, because like yeah, if you had a big TP stop loss, you're like, okay, price spikes down, comes up. But it doesn't always work out that way.
Yeah. Yeah. So you wouldn't recommend gambling news, huh?
No, no, yeah, not anymore. There's sometimes like there's some periods of time like when the market will be nice, like usually in the summer. In the summer, it's good because the market's typically slow.
Mhm.
Um, so like you don't have these big spikes in both directions. Usually have less players in the market. But this year, I think there's going to be a lot of players regardless because of the tariff news. So like regardless of the fact, I think there's going to be because normally the summer and the winter months are slower.
Mhm.
Like it's just how it is. It's how the seasons work because people are usually on vacation in the summer. So like there's just not enough people that are in the market pushing price around. And then same with the winter because the holidays.
Yeah. That's crazy.
Yeah, and it's
It's
the
something you gotta adjust to for sure.
oh yeah, no, for sure. And the thing is, I think the market's gonna stay pretty volatile. The good thing with, like I said before, is like even though the market's gonna be super volatile, it's not gonna be a huge problem for us because once we start to figure out what the average is, then
Mhm.
we can start adjusting our TP stop loss to like that those types of markets. Because like usually we'd be using usually be using a 30/30, but once we figure out what the average is, if it's like 50 or if it's 100 or somewhere around there, we can just
Mhm.
adjust our TP stop loss to that.
Okay.
Yeah. Yeah, so it's not going to be like a huge problem. I think we just have to kind of read the market a little bit
Mhm.
so that we can understand, what needs to be changed, which is really just going to be the TP stop loss.
Mhm. Yeah, when you were mentioning like the ATR was super high and it was very like not normal, I was watching it and I was like, no, it just staying at 200.
Yeah, no, that was crazy. Like I was like, like going to 100, I was like, okay, that's normal. It's not normal, but it's like acceptable, right? But
Yeah.
once it got to 200, I was like, damn, I've never seen it at 200. Like even people in the chat, they were like, bro, I've never seen it this high.
Wait, ever? That was like your first time
Uh,
really seeing it like that?
here, let's see. Let's go to or we can't really see here. Let's see. So let me go over here.
200.
Let's go to the 1 hour. Yeah, because we can't really see the ATR for here. Let's see. I'm just gonna. So the ATR is about like 600 today, right?
Uh-huh.
So let's go to COVID if I can. Let me see if I can even go back that far. Yeah, let's see if we can go back that far. I don't think it's gonna let me because it's so far behind. But so see here, here's the dump for COVID. COVID,
Uh-huh.
the volatility was crazy, but it was like tradable because see how it just goes straight down?
Yeah.
Like, like this is cool because you just take a sell and like your stop loss is wide enough, you're gonna hit your TP. You go
Uh-huh.
to today, I mean it's dumping, but it's going right back up, right? It kind of
Mhm.
goes down and it goes back up. Like, let's see, this drop right here from this high point to here, this is a 6,400 point drop from basically
Wow.
last.
Uh-huh.
This is in 8 days. So 8 days, about 6,500 points drop. So let's do 8 days here. Yeah, it's not, it doesn't even compare. 1, 2, 3, 4, 5, 6, 7, 8. For 8 days over here during COVID, it dropped about like maybe at 2,000 points.
Uh-huh.
And then we'll do like
That's
another 8 days here. Yeah, it's not even close because it should drop like 6,000 points.
mhm.
So yeah, COVID dropped, but it didn't drop like it did here, or it didn't move
Mhm.
like it did here. So yeah, of course, if you're doing like the full COVID movement right here, this is how
Yeah.
far it dropped. But let's see if we can see how big these candles were. Let's see, I think March. We'll go to like this big candle right here. Let me see if I go on the hour.
So COVID was more easier or like more adjustable to today's rate.
Oh yeah, for sure. Because you could just take sells and you'd be cool. So like the ATR right here was like 400, right?
Mhm.
on the hourly chart. But the ATR for today, or like for whatever date this was here, it was at 600. So the ATR was actually higher.
No way. Yeah.
It's worse than COVID. That's crazy, right?
Yeah. 600,
600
400.
versus 400 for COVID time. This is like the worst of COVID. This is when this thing was dumping.
No way. 600.
Yeah, so that's a lot. You think about it, that's another 200 points.
Yeah.
That's
And I'm
like,
over here thinking COVID was gonna be worse, but
oh yeah, no, today was crazy. I was like, fuck, man. I didn't know what to think because I was like, dude, this is crazy.
yeah.
But it's like it gives you FOMO because you see the drops and you see the moves and you're like, fuck, man, like I could take these trades and I can really make a lot of money, but then you could also blow your account,
Yeah,
right?
that's true.
Because the volatility is so high. But yeah, it's I'm glad we kind of looked at this because the movement is pretty crazy to compare it to COVID. Because everyone
Uh-huh.
thought the world was going to end for COVID. So like, oh, the stock market's going to go to shit because it's like there's not going to be a stock market. Today there's a
Mhm.
stock market, but people are just going crazy because of the tariffs.
Uh-huh.
Like, it's not like the stock market's going to disappear. It's just like people are just they're just on a frenzy right now.
Uh-huh. Was there a couple of trades today that like you took in your head and then it hit?
Yeah, yeah. So like there's a lot of them actually. I'm not like during the live session I marked up a couple of them and I was like, oh, this would be good, but like I have to use like a 200 point TP stop loss and I didn't take it, but then they ended up hitting.
Uh-huh.
So like there's a couple people in the group who took trades that I like marked up and I was like, this is a setup, but it's way too big of a move, so I'm not gonna take it. And they actually hit. So I was like, damn.
Oh, I did watch that. Yeah, I did see that.
Yeah, so there's a couple entries that I saw and I was like, man, this would be cool if I took it, but I was like, no, I'm not gonna risk it, 'cause there's no point.
Mhm.
Because like for me, I'm already funded, so it's like if I blow these accounts, then I'm screwed. I gotta start over.
Uh-huh.
It's
Man.
different when you're on an eval because it's like, all right, whatever, I blew the account, I'll just reset it.
Mhm.
Yeah, but for me, it's like I don't want to start over. It's like it's such a headache having to do an eval and trying to pass it, and then
Yeah. So
when
it's like
you're
you gotta be more careful.
exactly, yeah, that's why I'm like super conservative with my entries. Like today, I took trades, but the contract size was so small that it didn't really affect my account very much.
Yeah.
Because I didn't know what contract size to use. I was like, I've never went for like 100 points like that, or like 200 points.
Mhm.
It's so weird compared to taking a 30-point move. So yeah, I basically used like one contract. So it was like a couple $100 versus a couple $1,000.
Yeah, I'm definitely gonna paper trade this week. I do want to try it. I just always been watching, but I just want to try it, paper trade this
Oh,
week.
for sure. Yeah. Just paper trade it. And then because it's going to be the same thing as if you were trading, your real account. It's just not going to be real money.
Yeah.
So it's cool. I mean, you can paper trade it and then just kind of see, you might get lucky, you might not, but at least you don't you're not on this on the you're not on the hook if that ends
Yeah.
up being a loss for a win. Yeah, it's kind of but you understand the strategy, right? Like you know what to look for and stuff,
Uh-huh.
sort of.
Semi kind of, yeah.
Yeah, yeah. If you want to look, if you have any questions, like so what I would say is like I would look at the charts and then if you see an entry that you're not sure about, I would say like just write down the timestamp of the time, and then like when we have meetings like this, we can go over it. Like for example,
Oh, okay, okay.
yeah. So like say for example, like today you're like, oh yeah, this looked like an entry, but you weren't sure about it. You could have been like, hey Sean, I saw this entry, I wanted to take it at like I'll just pick a random entry here. You're like, oh yeah, I saw an entry over here that came up at like 10-12, but I
Mhm.
wasn't sure if this was a proper entry. I'm like, okay, cool, let's play it back, right? And then we would play it back, and you're like, okay, there's a buy signal, retracement, confirmation, and then we can like look at it. We're like, okay, this is a good entry, but then we would talk about like what was wrong with it, right? Like for one,
Yeah.
there's a red flag there, so obviously I wouldn't have taken that trade.
Mhm.
For two, the candle is huge. I mean, every candle is going to be huge today, so I don't think there would be any good examples for today that you can talk about.
Yeah.
Yeah, this would be like, okay, this candle is like 131 points, bigger than the stop loss. So there's like two things there to look at. Session was right there, red flag. Candle's too big, also red flag. So I'm like, yeah, I'm like, this is a setup, but I would have just avoided it because obvious reasons.
Mhm.
Even though it does push up and it probably eventually hits. But these
Oh, okay, yeah.
so like yeah, if you ever see an entry like that you're thinking about, or like say for example, you take an entry right on your paper account,
Mhm.
and you're like, damn, I don't know why this trade lost, or I don't know why this trade won. And then you're like, oh, you want to go over it. You could just like put on your notepad or something or in your notes somewhere, what you do is you could just go, you know how to see the time, right?
Yeah.
Yeah, so you see on the bottom it says the time. You can just
Mhm.
write down the date and time. And then when we have a meeting like this, we can just go over your whole list. Like you can have a whole list of entries and then
Uh-huh.
we can go back and review. Because the thing is you learn better by identifying stuff yourself and then making mistakes from it
Mhm.
versus me kind of pointing things out, right? Because I think when I teach you, or just in general, not just you in general, but when I teach people, if I'm pointing stuff out, it's gonna make sense when we're talking about it. But like what really matters is like how did you analyze it when you were by yourself?
Yeah.
Yeah, because that's how you learn it, right? It's like you make a mistake, like same like with you being a barber, right? It's like you had to fuck up a haircut to like be like, oh
Yeah,
shit,
yeah.
it's like a different blade or a different trimmer or whatever. And then you
Uh-huh.
learn from it, and you're like, okay, now I'm not gonna use that one, I'm gonna use this one.
No, that's actually how I learned. Like I messed up a couple times in order to like perfect your craft.
Oh yeah, and that's how it is, right? It's better that you make these mistakes in the beginning and then you have me to like kind of teach you the right way so that you can kind of learn from it versus just, trial and error. Because I feel like if you don't have someone to like really ask questions or bounce ideas off, you kind of just go in a circle, right? I feel like that's how a lot of traders are. They don't have a mentor.
Mhm.
They make a mistake and they're like they just kind of brush it off like, oh, that was whatever. And then they just end up keep making the same mistake over and over again.
Yeah, I think that's what I like about like the whole thing with paper trading because like you could do like unlimited amounts of like trades and like see and then see if it goes good or bad.
Oh yeah, for sure. And I think with the paper trading is that you're gonna be okay with making mistakes, right?
Mhm.
Like you're gonna be okay, like you're making mistakes and you're not gonna be super upset or you're not gonna be super like emotional about it because you're like, okay, well, I'm gonna make sure I don't make that mistake the next time. If you're because I know other people who start and they go straight into the live accounts or to the eval accounts. And dude, it's like a fucking like a fire hole, like a fire
Yeah.
trap. It's
Uh-huh.
like they burn the account, they buy another one. They burn the account, they buy another one. It's like, bro, you could have just been on a paper account and then make all these mistakes and
And
then
then go on.
go on to the real one once you're ready. But everyone's kind of different, right? There's this guy that was in our group a long time ago. I'm not gonna say his name, but people in the group know who he is. Like this guy
Yeah.
spent like I think it was crazy. He had like a gambling uh habit. I think he wasted almost like 40,000 in like one day.
No way.
Because dude, he would buy an account, blow it, buy an account, blow it, buy an account, blow it, and he kept doing that like the same day. It was like buy account, blow it.
Yeah.
And the thing is, these accounts weren't cheap. Like now with the promo, the accounts are super cheap. But
Mhm.
with these other accounts that we used to use a couple years back, they were like $1,000 for an account.
And he would just blow it all the same
Yeah,
day.
yeah. He'd blow the same day. Like he'd be like, oh, haha, whatever, took a trade, blew the account, and then he would like take another one, and he would just keep buying, like to the
Mhm.
point where his credit card, like the funding company, because I knew the owners of the funding company, and
Yeah.
like, bro, we had to cut him off. We're not gonna take your money anymore because like we feel bad for this guy.
Yeah, yeah.
It was like that bad. So
What? Do you think he still trades?
I think he tries. I
No way.
think
That sounds like a discipline thing also. You gotta know when to like stop also.
yeah, yeah. And gambling is like having a gambling addiction or gambling habit is like it's real, bro. It's like some people are like,
Yeah.
people at the casino, like there's an ATM machine there, so they're like they bet, they lose, they go to the ATM,
Yeah.
they bet, they lose, and it's just like rinse and repeat. It's the same thing with trading. It's like you have to have some sort of system in place and you have to have some
Yeah.
sort of discipline to just stop.
Uh-huh.
Like for me, it's like one trade usually, and I'm like done. Today I took two trades because I had lower risk. So I was like,
Uh-huh.
okay, I lost a couple $100, not a big deal. But if I lost like the full amount, I'm like, okay, well, I gotta stop because if I don't, I blow my account.
Uh-huh. So what's like the minimum and maximum trades you'll take in a day?
Usually, usually I count myself out at like one loss. If I'm using a full contract size, like I'm using the full size that I normally use,
Uh-huh.
then if I have one loss, I'm done for the day, usually.
Uh-huh.
Um, the wins, it just kind of depends. Usually it's like one or two wins, sometimes no wins, of course, if there's no entries for the day.
Mhm.
But I don't really count myself on the wins. I just count myself on the losses.
Okay, okay.
Yeah. Or like, in a sense, like For you, since you're new, you should probably have some sort of goal, right? Like maybe just one win or one loss. There's this
Yeah.
book, it's called Win Good Trade. It's like one of the most prominent like proprietary trading firms out there. He wrote this book, it's called Win Good Trade. They focus on just one really good trade a day. And that's kind of what I do, right? I look for like
Mhm.
maybe one really good trade. I take that, and if it wins or if it loses, I'm happy,
Yeah.
regardless.
So more of a, like a quality over quantity.
Exactly, yeah. Because if you follow me on the live sessions, you'll see that there's like maybe like 7 or 10 entries that come up, right? But there's only
Yeah.
one of them that I actually take, and that's usually that one good trade that I'm looking for the day.
Uh-huh.
Yeah. There's no specific number, but typically I'm aiming for like one very solid quality trade.
Mhm. Yeah, I
Yeah.
think I'm gonna just take it like that. Just do one trade a day. See.
Yeah, I think that's probably the best way to train your discipline. Because if you get used, so I mentioned this during the live session too. You got to choose a side, right? You either have to be conservative or you have to be aggressive. You can't be in the middle, because if you're in the middle, it's like you could have one. You could be taking one trade on like a really good day, and then on a really bad day, you could be taking like 10 trades, and that's like there's
Yeah.
consistency there. So like if you want to be conservative and consistent with just one trade, just
Hmm.
make that your routine, right?
Hmm.
Focus on just one really, really good trade and then be done for the day. Or if you want to be aggressive, take every trade that comes up and just lower your risk so you can take
Uh-huh.
that trades. Like where it basically balances the same thing, right?
Hmm.
Because you can take like say you could take one trade with like 10 contracts, and then you can make like 1,500. But if you take every trade with one contract, that gives you like 10 tries in the market. Like, but in order to make that same amount of profit, you'd have to have like 10 wins. So like basically most of them win or not.
Yeah.
Yeah.
Okay, I get it. Oh, and also, so like, I have a 50K account. So like, how does that like establish like what is the most that like they're giving me that I could use, and like how does that multiply it and then like get to me, like get back to me, like the account?
Let's see. So for your specifically a 50K account, so your max drawdown is going to be 2,500.
Hmm.
So the way that I usually do the calculations for that is I'll do 2,500 divided by three. This is how much you can risk per day, right?
Hmm.
833. So it's going to be tough for you to trade a 50K account right now because the volatility is so high. Because
Hmm.
even if you do one contract, or I mean, I guess technically you could do one contract. It's not gonna be the end of the world. Yeah, you have to just use one contract, unfortunately, because if you go to two contracts, you're gonna be risking 1,000. And when you're doing one contract, you're risking 500. The max risk that you should be taking per day is 833.
Okay, okay.
So and this is like during the eval phase.
Hmm.
So like back to your question, you have to reach 3,000 to pass, right? So in order for you to pass the eval, you'd be like 3,000 divided by 500. So you need to have 6 wins to pass the account. So like
Hmm.
once you get to that 3,000 mark, then you'll move over to a live funded account, or basically a PA account, or a performance account. And then from there, yeah, let's go with the FAQs. Because you need to reach a threshold before you get the payout. Okay. So you're at a 50K account. This is how much you need before you can request a payout. So you need 2,600. So basically 2,600 divided by 500. So you basically need five trades. You would need 5.2 trades, or 5.2 winning trades, before you can request a payout. And then once you request a payout, you'll be able to start, taking money out of the account.
Oh, okay, okay. I see what you're saying. Is
Yeah.
there like a specific way to request it, or you just do it all through Apex?
You do it through Apex. So like they'll have this button over here that says request payout, like when you log in.
Hmm.
The payout method, you'll put in your bank account information, and then once you're able to, you can request a payout. And then once you request a payout, it usually takes like a few days. It depends on how many payouts you've done. If you've done a lot, then it's gonna come like maybe next day. But it'll take a few days, and then from there, the money will get taken out of your trading account, and then they'll be depositing it like direct deposit into your bank account. So like you'll look at,
Oh, okay, okay. I see what you're saying.
yeah, it's a bank transfer or a wire, depending on how much you're taking out.
Hmm.
Yeah, so
Yeah.
it's straightforward. I mean, it's not super difficult. That's kind of how it works. So it's
So also like so when would I so after say I like completed the 50K account and then if I want to go like higher, would you recommend doing like the 100 one?
I would do the 150 because
150. Okay.
the thing is the numbers are like it just like here. Let's see. I'll do the numbers for you again. So let's do the 100. Let's do the 100K first, so you can kind of see the numbers here. So
Mhm.
for the 100K, you have 3,000 risk, right? Divided by three, it's 1,000. That's how much you basically risking per trade. So if you're
Mhm.
to do that, you would do two contracts, right? So two contracts, which is 1,000. Your goal for there is going to be 6,000. So that's again that's six trades. It's like the same thing. Like
Mhm. So I
6,000.
might as well just do okay.
Yeah. So you pass in six trades. It's the same as the 50K account. It's the same as the 50K account, but it's on. Sorry, dude, my bad. My wife is like on the camera right now. She's like bothering the dogs. So the
No, you're
dogs
good, you're good, you're good.
they're
Take
like
your time,
they're
take your
like
time, you're good.
they're tripping. Let me text her real quick.
No, go ahead, take your time. You're good, you're good.
I could like hear her. She's like making noise on the camera. She's at work.
Yeah.
And like the dogs are like looking around, they're like confused. So I'm like, because the dogs are crazy. Like once they start barking, bro, they like don't stop barking. So I'm like,
Yeah.
stop with the dogs. I
How many dogs do you have?
have two of them. Yeah, they're two dogs that they're Kodi Kai. That's what the company's named after. The two dogs.
Oh, okay, okay.
Yeah, I got two little they're two little small dogs.
They just don't stop barking.
They don't stop barking. Like one of them doesn't stop barking, and then the other one just barks for no reason because he's like,
Yeah.
I'm back, I'm not barking.
Yeah, yeah.
I'm like, bro. So it's like you don't really hear them as much, but like sometimes if they hear stuff, they'll like these guys will just be barking all like so loud during the mentoring sessions.
Uh-huh. No, you're good. No, my dog, like any little sound, he'll bark. He'll just bark also. So
Yeah. How many dogs do you have?
I just have one.
One dog? Yeah.
Yeah.
I used to have one dog, and then my wife she brought her dog over, and that's how
Uh-huh.
we got two. But it's
Yeah.
better. Like
I
they don't.
do plan on getting another one. Like when I move out of my parents' house, I do plan on
Yeah.
getting one like in my place.
Nice, nice. What kind of dog do you have?
Right now I have a Yoki poodle.
Oh, is he small? Yeah, he's small like mine.
Yeah, he's small, but I don't know. I feel like when I get my own place, I want to get like a bigger dog. I want to get a Cane Corso.
Oh, dude, those are huge. My neighbor used to have one. That dog's big, bro. He's like bigger than a
Yeah,
person. Like I remember when he would jump on me, like he was taller than me. His
really.
paws would go on my shoulders.
Uh-huh.
I'm like, damn, this dog's he's scary too, but they're nice. Like if they know you,
Yeah.
if they're trained and they know you, they're nice, but they look super scary.
That's what I'm saying. Like, I want to have like a good like, cause I'm gonna be by myself, of course. So I want to have like a good big dog. But I heard you could also tell like how big they're gonna get just based off their paws when they're a
Oh
puppy.
yeah, for sure. When they're a puppy, if their paws are huge, they're gonna be super big.
Yeah.
Yeah, because I have a German Shepherd too. Initially, so the company was called K2 Trades. It was named after those two dogs. Cody, his name was Kobe, and Kai, which is my main dog.
Mhm.
Um, used to be both of them, but then yeah, like I left him with my mom because like you said, you want a big dog, so my mom's there by herself.
Yeah.
Oh, he became a guard dog basically.
That's good. See, that's what I want. But I don't know. Maybe I might get two in the future when I get the house. Or we'll
Yeah,
see.
yeah, no, definitely. Once you get the training down, right?
Yeah, of course. That's the
Yeah.
plan.
Well, that's a
That's
cool.
also one of the reasons why I'm doing this too, because I do plan on like moving towards SoCal. Because right now we're in NorCal, but I want to move to SoCal and then also like learn this before I go. I'm not aiming to go till like the end of this year. So just
Oh
like
yeah, oh,
yeah.
definitely. And it's cool because like once you have like you have the whole business formation done and you're getting payouts, then you can start writing off your home or apartment as like a business office. So like it kind of
Wait,
goes,
really?
yeah, it comes full circle. So it's like
Uh-huh.
because that's kind of how it is with me. Like I write off like I live like in a penthouse right now. I just kind of write off the whole penthouse because it's like my office.
Hmm. You
So
stay in
like
California?
yeah, I live in Irvine.
Oh, Irvine. Yeah, I plan on moving to Long Beach. That's where I plan on.
Nice, nice. Yeah, I went to undergrad in Long Beach.
Uh-huh. Yeah, my
Yeah.
little brother goes there right now. So I was gonna be in like the same city.
Yeah, Long Beach is cool. It's cool, cool little city.
Mhm.
And it's like in the middle, so it's like it's nice. But it's like, I mean, I'm pretty sure you heard how like ghetto LA is.
Yeah, yeah.
Like Long Beach is LA County, so it's like I try to never go to LA County if I don't need to. I only go there if I need
Really? Yeah. I heard Irvine's really nice. Like I've gone to Irvine like a couple of times. I went to like Irvine Spectrum. So nice. I like it over there.
Yeah, yeah. Irvine's nice. It's just super expensive to live here. But once you got it like that, it's like not a
Uh-huh.
big like you'd rather be someplace safer than
Yeah.
someplace that's not safe.
Uh-huh.
And
You
the
have a
long
friend that stays over there in Irvine.
oh, really nice. Yeah.
Yeah, she stays at like Broadstone Edition or something.
Oh, nice, nice. Yeah. So, yeah, yeah, I know where that is. That's like one of the newer buildings.
Hmm.
I was gonna move there too, but they didn't have like because I like staying in like the top floor and like the penthouse units, but
Uh-huh.
when that one was built, someone already kind of took the top floor. So
Uh-huh.
I don't like having an upstairs neighbor. Like
Yeah.
my last place I was at, I was like in like a loft where it was like a three-story loft, but
Yeah.
the person above me, I think they were like an OnlyFans person, bro, because it was so loud. So
Wait,
loud.
for real?
At all times of the day, I was like, man,
Yeah.
it's so annoying. So like I whenever I move anywhere, I don't
You want to be the top of the floor.
yeah, I want to
Like,
be the top because I don't want to hear my neighbors above me or I don't want to hear the feed or anything like that.
yeah. Yeah,
Yeah.
that's the plan. I do want to go to a penthouse one day. That's the plan.
Yeah. I mean, yeah. It was nice living in a penthouse, but like I'm moving to a house like in a couple weeks actually. So I just
Oh, wait,
closed.
really? So you're moving out of the penthouse?
Yeah, yeah. I have this place until like mid-May, but I'm already over it. So I'm gonna
Mhm.
move to a house because we have a baby on the way.
Oh,
So
yeah. Yeah,
yeah, so we have
congrats.
like a pretty nice house, pretty decent, nice house here in Irvine with like a backyard. So like,
Uh-huh.
for example, if my dogs are barking, I'm just gonna let them out the back. Then
Uh-huh.
have to listen to them.
That's good. I also heard it's really nice at like Newport too.
Oh yeah, no for sure. Yeah, I live on the border of Newport. So I live on the border of Newport and Irvine, basically.
Mhm.
I live
That's
like right
cool.
next to the airport, if you know where that's at.
Mhm. Yeah, that's good
Yeah.
though.
Yeah. But yeah, back to us saying, well, my bad. I got super
No, you're good. You're good. You're good.
yeah, so let's see. The 100K count is basically gonna be the same. For the 150K count, we need to make 5,000 divided by three. That's gonna be basically 10 contracts. Yeah, 10 times 5 times. Or no, it's gonna be less because we're using 100 contracts or 100 TP stop loss 6 times.
So when you say contract, is that like 10 trades? Is that what you mean?
No, no, 10 contracts is the unit size that you'll use. So,
Mhm.
well, I mean, technically, yeah, it's like 10. It's like you're technically open like 10 separate trades, but they're all connected within like one account.
Uh-huh. So like you don't have the 50K one. I just have one contract, correct?
Let's see what I have here. Yeah, so you'd be using one contract because that's gonna be like what's allotted for your risk. If you're doing a 100 point stop loss, it'd be a little different if you're going for 30 points like we normally would.
Hmm.
Because since you're on since you have to widen out the TP stop loss, you'd have to use one contract. Because normally you would probably use, I think you use like four or 5 times.
Hmm. Depends on the
Yeah,
TP though.
yeah, yeah. Because yeah, if your TP was closer, you could use like maybe even 6 contracts. No, you
Mhm.
probably use
Oh,
five.
okay, okay.
You use 5 contracts actually. Yeah, so that sounds about right. If you were doing a 30 point TP stop loss, you use 5 contracts. And you can see here that the risk is closer to what you were aiming for, right? Because we were aiming for 833.
Hmm.
That's how much you wanted to risk per trade. And if you're on a smaller stop loss, you'd have the number would be closer. So you'd be able to pass.
Oh, okay, okay.
Yeah, because since you're doing 100, well, we're just estimating 100 points. You're going to be making instead of making 750 per trade, you're going to be making 500 per trade.
Okay, okay.
To see how it takes it, like the numbers, but you just kind of have to do like the equation to figure out like where you'd be closer to that. Because if you're
Mhm.
doing 750, like say for example, you're doing 750 and then I think your goal is 3,000, right?
13,
Yeah,
10,
3,000
15.
divided by 750. So yeah, so if your TP stop loss was 30 and you're making 750 per trade, you'd actually pass within 4 trades.
Uh-huh. Oh
Because
yeah,
like
that's what you said. You said it would take like within a week.
exactly, yeah, but now because we're going for possibly a bigger TP stop loss, it would take a little longer, like it'd be 6 trades instead of 4.
4, yeah.
Yeah, so it's like a give or take. I mean, it kind of sucks that it's gonna take a little longer, but it also allows you to have less, like you're gonna be at less risk with each trade that you take.
Mhm. Yeah,
Yeah.
that's fine. I'm patient, so it's okay.
Yeah, so my hope is that the market goes back to normal because if it goes back to normal, we're better off going for a smaller target versus the bigger ones.
Mhm. Yeah, that's fine.
Yeah, but we don't know. We'll see what once we cross that bridge.
Mhm.
Yeah,
Yeah,
but yeah,
time will tell.
I know time will tell exactly. Like we don't know until we know. But yeah, if you're doing the, let me see how many trades it would take for the 150K count. So 9,000. I think it was like 500 or here, let's just so 5,000 divided by 3, it'd be 1,600. So I'll do um 3 times 5 is 700. Okay, so you do 3 contracts, 1,500. So the goal for the 150 is, and I hate how this, I don't know why they have this button here. It's that you click on.
Yeah, yeah.
Yeah, so the goal for the 150 is 9,000.
So profit goal, okay.
Divided by 1,500. Yeah, so it wouldn't matter. Like it actually doesn't matter what account size you're doing. If you're doing the 50K or the 150K, it would still take you 6 trades to pass it.
Mhm. No
So
way.
yeah, it's kind of,
The same thing.
it's literally the same thing. So it wouldn't matter which account size you do. This is only if you're using a 100-point stop loss though. So like I'm
Yeah.
hoping that the market goes back to normal. We don't have to go for the 100 points because obviously the smaller targets, the better because you can make more profit that way with
Mhm.
bigger risk.
Okay, that makes more sense. It just depends on the TP, but as of right now, it's moving like that.
Yeah, it's kind of crazy. I'm like curious now, even on the 300K accounts. Because I'm like, damn, the numbers are exactly the same. No, the 300
Yeah.
would be way off because it's like the max drawdown is 7,500 and your
Yeah.
target is 20. So it's obviously 300 would take way longer.
Mhm.
700, 2,500, so I'll do 7 times 5 times 100. That's way too far off. 5 times 5 times 100. Okay, so 2,500, 20,000. It's like 2 more trades. So
Mhm.
same difference, but
TP is a lot more.
it's a little more. Yeah, it's a little more. But yeah, I mean, you get the gist of it.
Yeah. It's bigger risk though.
Yeah, it's bigger risk and it just takes longer. Like, bro, I wouldn't recommend that. I remember when I had passed the 300K for the first time. Like,
Mhm.
bro, it took me like over like 2 months. It was so annoying. Because you have like a good week and then you have an okay week and then you have a
Uh-huh.
slow week and it's like, dude, I just want to pass. And
Uh-huh.
yeah, it took me I think like almost 2 months to pass it. I mean, thankfully you passed it,
Yeah.
but you kind of that's the thing with these prop firms. Like a lot of people don't understand. They don't realize that like these prop firms, they don't care if you make a lot of money. What they want to see is you're making consistent money, right? Because they don't want you to be trading their money then being super risky with it. They
Mhm.
want you to be like consistent. Like for me, I'm like what I would consider or what they would consider a good client or a good trader because
Mhm.
I bring in like consistent numbers, right? Like every time I
Yeah.
take a trade, I'm like risking 2,000 or I'm gonna make 2,000. So like for the day, they're like, okay, this guy, he's gonna make this much or he's gonna lose this much. His win percentage is this number. So it's like we could expect that he's gonna yield profit every single month.
Mhm.
Because I can rinse and repeat the process for like a month's time. They don't like the people who are making like
Risky trades.
exactly like say for example today, right? This thing shot up like super crazy,
Uh-huh.
and then someone could have easily made like 20,000 on here, right?
That's crazy.
So like they could have made 20,000, but then say for example the next day they lose like 60,000, and then the
Oh,
next
so yeah.
Yeah, so there's no consistency there. And like you think about yourself as an investor, right? If you're to invest in someone who trades and you want your money to be safe, you want someone who's going to just yield profit every month, right? Like every month you're like, okay, I can kind of estimate that this guy is gonna yield in a couple $1,000, you know?
Mhm.
It's not like they're making like 10,000 and then the next month they're losing it all and they're like in the super negative, and then the next month they're back up. It's like a huge gap right there. I'd
Mhm.
rather have someone who's making like a couple $1,000 a month, and then but it's consistent. Like I can expect it, right?
Yeah.
Yeah.
So the win percentage is way higher.
Yeah, exactly. Or not even, it doesn't have to be super high, it just needs to be consistent, right? Like at the
Yeah,
end of the
consistent.
month, if you want to be in the green, basically. Doesn't matter
Mhm.
how much or how little, but you just want to be in the green at a point where you don't have to worry about that your money's going to disappear, right?
Yeah.
And I think
It
that's
just builds more trust as like if you're someone's client, like you'll build so much trust.
exactly, yeah. And that's why like eventually they tend to move people into what we consider a live funded, where it's like
Mhm.
actual real money versus like these sim funded accounts.
It's crazy.
Yeah. Yeah, but yeah, dude, I don't know if there's anything specific you wanted to cover today.
Mhm.
Like after our first meeting, you kind of like had like a cool rundown of like how everything, and I'm pretty sure like you kind of have an idea of like the routine already every morning.
Uh-huh.
But like, I'm not sure if there's anything specific that you wanted to cover, anything you were confused with.
Um, is there anything specific that you would want me to do this week until our next meeting? Like, so I could do or anything? Like, what would you recommend as if you're in my position to do?
Well, it kind of depends on like where you are with like your ability to like identify entries and stuff like that. Do you still have trouble in identifying entries, or are you pretty good on that?
Well, I'm gonna dive into it tomorrow with paper trading. I'm gonna see how it goes, and if anything, I'm gonna just write notes, and then until the next meeting, like we'll go from there. But
Yeah, exactly. And then like if you want to just like practice, you can always go back to like previous days. Like probably go back like a couple weeks before the market started moving all crazy.
Mhm.
Like you can just kind of go backwards and
And you
then
could like trade like that, like in a way, like to visually do it.
oh yeah, if you wanted to do that, yeah, you could do that. So like, do you know how to use a replay function?
No, oh yeah, may you show me?
Let's see, I'll show you. So like let's say for example, because the market was moving kind of crazy last week, right? So
Yeah.
we're gonna go back into like March. So we'll go back to like say March. It's not going to be the same way to enter trade, but you can still kind of play around with it to have an idea of like how to enter the trade and stuff like that.
Uh-huh.
So let's go over here to like March. Let's go to like say um we'll go to like March 31st, like that Monday. So say for example you wanted to just replay the day, right?
Mhm.
So say like the day started right here at 6:30,
Mhm.
and then you hit this replay button, which is at the top. It says bar
Mhm.
replay.
Yeah.
And you'll just click on like wherever you want to restart the session. So like say for example, if you wanted to restart the session exactly at 6:30,
Uh-huh.
you can click on that and then it's gonna replay back to where it was on that day.
Uh-huh.
So see how the ATR here, like it's not 200, it's 15, right? This is
Yeah,
normal.
so that's very normal.
Yeah, it's very normal. So like market opens right here and the ATR kind of pushes around a little bit, but it's still at 20. It's not like super crazy. So like say for example, you're looking for MPS V2 setup right here. You have a buy signal
Yeah.
and then you're kind of like setting up. So like buy signal, retracement right there. And then you're looking for a green candle. Obviously, this is one that you probably wouldn't take because I mean, obvious reasons, there's a red flag right here.
Mhm.
So this would be one that you would skip, but if you wanted to test this out, you would hit buy here. So now you'd be in the position, and then the trade kind of runs through right there. And then
Mm, yeah.
you probably would have gone out right here, right? Because it probably
Yeah.
pushed up to your 30. Yeah, so it looks like you would have hit 30 and then you would have just closed it out because you would have been, or actually, let me see if I go back by one. Okay, so say for example, you entered right here, and then your TP is gonna move up to here, and your stop loss is gonna move down to here. So
Mhm.
this is like you basically replaying like if as if this was a real trading session.
Uh-huh.
The trade would have ran, you're like, okay, hit your profit target right there. So now you're in profit 150.
Oh shoot.
And then, yeah, if you wanted to keep testing this out and you just keep going forward even further, you're like, okay, let me look for the sell signal, look for the trade in the opposite direction. So like right here, we got a sell signal, right?
Yeah.
We got we can't tell what that is, so we're just gonna ignore that. That was a red candle right there. There's a green candle, and there's a red candle right there, right? So here, now you would take your sell. And then if you were to do the math here, I mean,
Oh
obviously,
yeah. How do you do the math for that one? Like, how do you know what TP to do?
so if you look at the ATR here, it's only at 34, so it's pretty,
Oh, okay.
yeah, it's pretty normal. So you just stick with the 30-30. However, looking at this candle right here, this is one that I wouldn't take. And main reason is because the candle's too big. That's a red flag, right?
Yeah.
Like red flags are if the candle's too big, if it's at the sessions, if it's at a news price or anything like that. I wouldn't take this trade, but again, because you're practicing, you can just take the trade and then kind of test it out to
Mhm.
see if it does what you're looking for. So again, right here, your profit target's there, stop loss is up there. The trade runs, goes down a little bit, and then now it hits your profit target again.
Mhm.
And now you're in profit 300 because you took two trades.
Oh, okay, okay. And also, so since I put replay, like I don't have to put paper trading in, it just automatically just replays.
Yeah, it's just automatic because when you're in replay mode, it already understands that okay, you're practicing right now. So you'd be able to just kind of buy and sell like at any given time wherever you're at.
Okay, I think that's what I'm gonna do. I'm gonna do that until I do paper trading tomorrow because I do want to try it out.
Yeah, this is just to like understand the strategy and understand like where your entries are coming in from. But tomorrow when you do paper trading, like during the live session, that's gonna be more realistic because it's gonna
Yeah.
be different. Like for yours here, it's not gonna look like this because you have to open up your window ticket, right?
Mhm.
So like if you were to trade paper trade, see, yeah, if you were to paper trade here, so when you're actually entering a trade, like say for example, you're getting a sell here, right?
Mhm.
You hit sell, you would hit your you turn on your take profit. You said it's at 30-30. Like right now, the ATR is small because the market just opened up.
Yeah.
But like we're just gonna use this as an example. Like you have your ticket your window ticket here, you have everything set up, you hit sell, and then you're in the position. See how it like sets up your TP stop loss already? You don't have to drag anything.
Yeah.
Yeah, so it's it makes more sense for you to paper trade than to do it in replay.
Okay, yeah, I see what you're saying.
Replay is just a practice, but I mean, you can paper trade right now if you wanted to. You can open up your charts and you can just play around with it. Like, say, for example, if you wanted to practice taking a buy, like, say, for example, you think price is going up, like, all right, I'm gonna enter this here for a buy, take profit stop loss set, you buy market, and then you're in the position already.
Mhm. Okay.
Yeah. So it's just, yeah, I would use the replay just for like to understand the strategy and understand like where you're supposed to enter. But then when you paper trade, this is going to help you actually understand the executions because if you're in a position like this, or if you see a position, this is how you're going to enter in like in real market.
Mhm.
Yeah, if that makes sense.
Yeah.
Yeah. Yeah, because right here you can kind of use all the functions. This is like if you're actually trading,
Mhm.
right? Because the same functions here that you do is going to be the same thing on your actual your Apex account. Like
So it's
using
more realistic if you do it like,
Yeah,
okay.
exactly. Because you're using the buttons here to kind of like enter the position, and you'll be doing the same thing with Apex when you're trading with your actual account.
Mhm. Okay, okay, that makes sense.
Yeah, but yeah, bro. If there's anything else you want to cover, let me know so we can cover it. Otherwise, like it's gonna be a lot of trial and error. Like you said, you have to like make the mistakes, take notes, and then for our next session, again, we would we'd go over the stuff that you need help with.
Mhm.
Because like I can't really like teach you stuff that you're not confused with, right? Because if I just keep reiterating stuff, like if I'm like, oh, here's what the strategy looks like, it's like, okay, you understand it already, so it doesn't make a difference.
Yeah.
Versus like, if there's a specific entry and you're like, I took this entry and this entry lost, but I need to understand like why did it lose so you can learn from it. And then
Yeah.
I can point things out. I'm like, oh, there's a session here, or there was news price here, or the market was crazy, or the ATR was all over the place. there's gonna be specific things that we kind of look towards so that in the future, like, okay, this is what I can look for, right? This is what I can point out if I'm ever looking for an entry.
So you're like basically like correcting me in a way. Like I'm gonna just write down all the notes I have, and like when the next meeting, I'll just like mention it to you, and then you'll just correct me in a way.
Exactly, yeah, because that's usually what people are doing now. Like they just write down the timestamps, and then like when I meet with people, they're like, okay, can we go to this trade from this day? And they have a timestamp, so I'll just pull up that day, and then we'll analyze it. And they're like, okay, I took this trade at loss, but I don't understand why I lost it. So like
Yeah.
we'll go back, we'll look if there's any confluences, if there's any red flags, any of that stuff, just things to point out. Because like you've seen on the live session, I pretty much look at the same thing every day. So like it's
Mhm.
just routine. It's basically you see the setup and then you look for either confluences or you look for red flags. And
Yeah.
if you have a bunch of confluences, you're like, and no red flags, you're like, all right, I'll take this trade. Or if you have a trade with no confluences and you have a bunch of red flags, you're like, okay, for sure, next time I'm not going to take this trade. Because
Mhm.
those are the only things, it's really just understanding the strategy and then factoring in the confluences and the red flags. That's really.
Okay. Okay, sounds good. And then when do you think the next meeting will be? Will it be another Monday?
It's up to you, bro. Like we'll set it up with you. I mean, if you want to change it up a little bit, or if you want to have it sooner, if you want to have it later,
Mhm.
uh, it works for me. Like whatever you want, I can check the schedule and I can put you on it.
Yeah, if you want to do next Monday, like I just like meet every like 7 days a week because see what I got, like progress I have within the week, and
Yeah,
then what are questions.
yeah, no, definitely. What time are you thinking next Monday? Same time or
Yeah,
later?
same time is
Uh,
okay.
Okay, I'll put you on the calendar right now then.
Okay, perfect. Yeah, because I'm trying to learn this like as soon, like really like soon, because I don't know, I'm really into it, but
Oh
it's
yeah, for
just yeah,
sure.
I gotta
Yeah,
just throw myself in there.
yeah. No, the thing with this is that we talk about it's really gonna be trial and error because like the more you practice and the more that mistakes you make and the more corrections you make from those mistakes, the faster you'll learn. Because
Yeah.
that's just how it is like in general. Not just learning trading, but trading in general, you know? Because I think
Mhm.
that's the best way to learn is to make mistakes and then understanding what you did wrong so that the next time you do it, you improve on it.
Mhm. Yeah. And also, I just want to say I appreciate you always putting time for me and stuff like that.
Yeah, bro, no problem. I'm here to help. It's cool seeing because for a while I didn't mentor. I didn't mentor for I think like I did group mentoring sessions where I would just go on and I would just people would pop in questions, but I didn't do these types of one-on-one sessions for like maybe like 2 or 3 years, bro. Because it was like,
Yeah, Jared
yeah,
mentioned that to me, and he's like, "Drew, you need to do this." Like, he's doing one-on-ones. He rarely does it, and I was like,
yeah. Because like what happened before is like I would do a lot of these one-on-ones and like it was just like people were in trading for like the wrong reasons, right? Like they wanted to make all this profit, but they didn't actually want to learn. So it was like it's kind
"Mhm,
of annoying because it was like I put all this time into someone, and then they're just like they'd be around for like maybe a couple weeks, and then they're like, nah, I don't want to do this anymore.
mhm."
So that's why I try to like only teach people who like make a commitment, right? Like like
Yeah.
it's a 1 year commitment. Because the thing with trading, and you've probably experienced it, it's like you don't really get this right away. It takes time. It's like
Mhm.
learning a language, basically. You got to keep practicing until like you really start to understand it.
Yeah. Oh no, I'm here for a long time. Like, I'm very committed to when I put my mind to something. I'm very committed to what I want to do.
Yeah, no, definitely. I mean, that's key. The thing with trading is like if you put money aside and you just focus on like the actual aspect of trading and analyzing the charts and understanding what you're reading, then it makes things a whole lot more efficient and it makes things a whole lot more fun. Because like
Mhm.
that's like with me trading now, right? Like I don't even really focus on the profits or the money. I really just focus on winning every day. If I could win every day, it's like the profits are gonna be automatic. And
Mhm.
that's
100%.
and
Yeah.
that's exactly how everything added up. Because like it's crazy for this year so far. Like I was not expecting to do the numbers that I'm doing, right? Because I'm like, oh, I did pretty good previously, but now that we have all these other accounts and they're just starting to multiply, it's
Mhm.
like one trade a day, and then just consistency, and it just adds up. Like without.
Consistency and discipline. Yeah.
Mhm.
That's crazy. Oh, and also like you know how when you request money out, like do they take a certain percentage of it, or like do you get the whole thing?
So let me check the FAQs again. I think for a certain amount, you get all of it. Here, let's see. Um, so initially you're capped at 2,000 per request. Basically, every 8 days you can request 2,000.
Hmm.
And let's see. Yeah, because it is a 90% split, but I think for like a certain amount, I don't know what the number is here, but for a
Hmm.
certain amount, you can like you get 100% of the profits.
Hmm.
So like I think for like the first like couple $1,000, you keep 100% of it, and then um after that it goes to a 90-10 split where they take 10% and you keep
Hmm.
90.
Oh, yeah, that's not that bad.
Yeah,
So,
no, the split with Apex I think is probably the best.
mhm,
It's just you have to like it's just kind of annoying because you have that safety net. You can't just
mhm,
like pull it all the time. But it wouldn't really matter because like I said, if you're not focused on the money and you're just focused on winning every day or winning at like closing every week green, you're gonna have a profit in it regardless to
yeah.
bust out, right? So yeah, yeah, initially it's 100% of it, and then once you reach that threshold, then it cuts down to 9 to 10 split.
Mhm. Okay, okay, that makes sense.
Yeah, I mean your main goal right now is really just to recoup your expenses. Once you recoup your expenses, everything is like straight profit from there. So
Mhm.
that's the key thing here. It's consistency.
That's perfect. Yeah, I'll definitely get back to you by Monday. But I'm definitely gonna practice and paper trade this whole week and see how everything goes.
Yeah, paper trade, make mistakes, make correct moves, make a little bit of everything, and then
Mhm.
just take notes of like all the trades that you're confused about. You don't have to take notes on every trade, of course, because not everything's gonna be questionable, but like
Yeah.
there's something that you're like a little confused about, then yeah. Like if you're trading right now, I wouldn't even tell you to trade right now because the volatility is so low. But
Mhm.
I would just focus within that window between like 6:30 and 8.
Okay, perfect.
Yeah, because that's usually where we're gonna have the best entries anyways.
Mhm. Okay,
But
perfect.
you can practice whenever. It's just when you're taking the paper trade account or trades, I would stick to like the market when it's actually moving.
Okay, sounds good. Thank you, Sean.
Yeah, no problem. If you have any questions, bro, feel free to hit me up.
Okay, sounds good.